Hi, I'm Brock.
I'm Jim.
Before we get started, if you want to stay ahead of the cattle markets, sign up for our free daily briefing at herdadvisor.com. It's delivered right to your inbox every morning, 5-minute read. And when you're ready to dial things in, the easiest way to add $300 per head is timing your sales right and choosing the right sale barn. That's what the Cattle Market Guide helps you do. For just $75 a year, less than taking your wife out to dinner. Check it out at herdadvisor.com. Welcome back to another episode of Cattle Market Guys. It's December 2nd, 2025, and you're tuned in for our midweek market check. I'm Brock, and I've got my eyes buried in the latest data, futures, and forecasts from this week so far. Everything producers need to stay sharp in a volatile cattle market. Right now, we're seeing some interesting divergence between cash prices and where futures are headed. And honestly, it's creating some real decision points for anyone thinking about marketing calves here in early December.
And I'm Jim, just trying to keep Brock honest and make sure y'all remember the cattle still eat hay no matter what the board says.
That's about right. All right, let's get into it. First up, our latest market snapshot, real data from the last few days. If you're selling calves or thinking about hedge positions, this is where you want to pay attention. Looking at the 500 to 549 pound steers nationwide, we saw a current average price of $365.30 per hundredweight. That's still a strong price tag for lightweight steers, but futures paint a different picture heading into winter. The national forecasts for those steers drop next week to around $329.95, and by 4 weeks out, we're looking at $309.55. So that weaker outlook raises some eyebrows. Compared to where we were just a couple weeks ago, this marks a pullback. Producers might want to think twice about holding calves too long through the holidays. We're also seeing it reflected in the futures action. While feeder and live cattle contracts edged slightly higher on the trade floor in the last day or two, the underlying trend remains cautious.
That right there feels like the old Christmas slump come early.
Yeah, exactly. The cattle site reported this morning that while beef futures showed some minor gains, they're mixed overall. Live cattle front month ended down 1.375 at $214,200. And feeder cattle were off nearly $290 at $321.75. And corn futures remain steady at $433.2 for December. So feed costs haven't spiked, but they're definitely not giving us any breathing room either. So we've got spot prices still strong for light steers, declining short-term forecasts, and some choppy futures action. It's creating this tension between what the cash market's telling us and where the paper's headed. Jim, does that all line up with what you're seeing out there?
Well, Brock, I'll tell you, folks I talk to are still getting some decent money on the front end, but there's more nerves than cheer in the pens lately. And you know what they say, if the board's twitchy, the buyers get itchy.
Exactly, and that takes us right into what's really happening in the futures market this week. So these cattle futures are sending some mixed signals. According to CME reports, feeder and live cattle saw some temporary gains early after Thanksgiving, with markets adjusting from the holiday pause. But by Tuesday, we were looking at renewed downward pressure. Looking strictly at closing prices, feeder cattle, coded as GFF 26, ended Tuesday at $321.75, down $290. Live cattle, or LEZ 25, fell to $214, down $200, down $1,375. That's notable because we were expecting at least temporary support from continued boxed beef stability. But instead, we got technical selling and downward momentum driven in part by broader economic influences. Wall Street impacts were mentioned by analysts as traders moved out of edge commodities in sync with broader risk-off sentiment. Now, what's interesting is that even with these dips, some producers might be hesitant to jump into hedging because the cash market has been holding its own in several regions. So then we're left asking, are the futures overshooting the downside here, or are they just catching up to a softer cash tone ahead?
Hold on, Brock. This here ain't our first rodeo with this kind of market misalignment. Back in October of '87, Black Monday, we got walloped from the stock market crash. I remember clear as day. I was fixing to sell a load of feeders that week. Board was swinging wild. Limit down one day, limit up the next. Bankers from Midland were calling me in a panic, wanting to know if they should lift hedges or double down. But most of us old-timers, we just sat tight. Cash cattle still had to move, and buyers still needed the beef. The futures board's like a drunk uncle at Thanksgiving, loud, swinging wild, and not always making sense.
That's one way to put it. And that principle still holds. Sometimes the best trade is no trade when the board's disconnected from fundamentals. With futures down pretty sharply this week, but boxed beef holding relatively steady, there could be opportunity for producers with flexibility on when they market cattle. Another dynamic, feeder futures are reacting more dramatically than live. That typically suggests buyers are more cautious about margin pressure from feedlot placement through the winter. So if you're sitting on calves or backgrounded yearlings, it might be time to revisit your marketing window. Consider selling sooner if you're comfortable with current calf prices, or locking in part of your risk profile with options instead of full-on futures. Don't let the board spook you out of a solid cash trade if the fundamentals in your local market are still supporting good prices.
And if you can avoid chasing the herd, better yet. Like Grandpa used to say, don't sell your cows just because your neighbor sold his boat.
That one's going on a t-shirt. Now let's shift gears into operations. The Packers are making headlines again, and this could affect regional marketing dynamics more than people realize. New reports from Beef Magazine and Ag Center's Cattle Report are pointing to some changes that could ripple through producer strategies in the coming weeks. First, the headlines. Tyson announced some updates on their plant operations. While they haven't disclosed full details yet, the general indication is they're pivoting some operations and reassessing capacity at a few locations. Combine that with moderately healthy slaughter rates projected for the next 2 weeks, and we've got a recipe for regional variation in show lists. According to the latest cattle report, show lists across the plains are mixed. Some areas are reporting tighter numbers, while others are coming in a bit heavier. That dynamic often shifts leverage week by week, especially if a big plant adjusts its kill schedule or yard intake. Now, if slaughter rates do hold steady, that's a bullish signal for feed yards trying to stay current. But if one region suddenly loses capacity, either from labor issues or realignment, like we're starting to see from Tyson, that can widen the basis in that area and kill cash strength in a hurry. What's your take on that, Jim?
Well, now, I've seen what one broken plant can do to a whole region. It's like taking the piano player out of the saloon. You still got a dance hall, but nobody knows what song to move to.
Yeah, and when it comes to cattle, logistics matter more than sentiment. A packer shift in one state can affect feeder bids 2 states over. So producers ought to be watching local auction volume, packer interest, and listening to buyer chatter, not just the national averages. If you notice declining show lists, but your region doesn't get a bump in packer competition, that could be a sign that your local plant's pulling back intake. That's when it pays to get your marketing lined up early in the week instead of waiting till Thursday hoping for a bump. The early bird really does get the worm when packer schedules are in flux.
Best cattle sale I ever made was on a Monday just because I was already hauling hay that way. Beat the rush and got top of the ticket. Never underestimate being early.
Amen to that. Now on to our final topic for today, global shifts in beef demand and export competitiveness. This one pulls the lens back to the bigger picture, and it's something U.S. producers need to keep an eye on because it affects our long-term competitiveness. 2 significant trend lines here. First, Rabobank projects a 0.8% drop in global beef production in 2025. That includes contraction in Latin America and expected headwinds in North America, especially as the U.S. cow herd tightens. But on the flip side, Australia is surging forward with grain-fed beef. According to the cattle site, they've seen a sharp rise in feedlot capacity as global demand rises for grain-finished product, particularly from Asia. One specific example, they added 6,000 Black Angus head to a feedlot near Queensland to meet a new export contract. What's notable is that while global supply is tightening overall, international competitors are filling in the premium space left by declining U.S. exports. It's a reminder that the export game isn't just about volume, it's also about meeting the specs and timelines global buyers want. And right now, Australia is doing that better than we are in some markets. Oh.
That reminds me, back in '96, when that BSE mad cow scare hit Britain, we got a taste of how fast global beef demand can swing. I remember sitting at the San Angelo sale barn in March watching prices pop because Japan and South Korea stopped taking British beef. That summer, I even had a Japanese businessman come tour our ranch. First time I ever translated hot wire fence through an interpreter. That whole year taught us, if you're the reliable supplier, you're golden. But you fall behind, someone else steps in fast.
Yeah, and right now, Australia is stepping in. With their proximity to Asia, stabilized herd numbers, and smoother export logistics, they're building momentum, especially in markets that used to lean heavier on U.S. supply. And with Mexico facing new export challenges due to screwworm containment, which is impacting inspection wait times, that leaves the U.S. with fewer easy wins. For domestic producers, this global shift means you've got to stay nimble. If you're marketing cattle with prime grades or in programs like NHTC, now's the time to lock down export specs and get ahead of quota limits. The window for premium export placements could tighten as competitors gain market share.
Global beef's like a poker table. If you don't know who the sucker is, it's probably you.
That one's going up next to the t-shirt you already sold. All right, folks, let's recap a few takeaways from today. First, light steer prices still strong at $3 and $65.30 for 500, 549 pounders, but forecasts trend softer, especially over the next 4 weeks. Futures are shaky, so hedging strategies should be revisited if you're holding calves into the holidays. Second, futures markets are mixed this week, with feeder and live both down despite stable boxed beef. Technical selling and broader economic worries are at play. Don't let the board spook you out of a solid cash trade if your local fundamentals are strong. Third, packing plant shifts, especially from Tyson, could add regional volatility in show lists. Stay ahead by watching plant hours, local kill data, and early week bidding behavior. Getting your cattle marketed on Monday or Tuesday could save you headaches later in the week. And finally, globally, beef production is trending down, but Australia is stepping up their grain-fed exports. U.S. producers focused on quality programs or exports need to sharpen their logistics now, not in March. The export game is competitive, and the reliable suppliers are the ones who will win.
And remember, markets are like cows in a rainstorm. You can't stop them from running, but you can sure keep yourself from standing in the mud.
Well said, as always. For those tuning in, we'll be back next Monday with a fresh weekly outlook. Until then, keep your pens dry and your market plans sharp. Stay flexible, watch those local signals, and don't let the noise drown out the fundamentals.
And if your neighbor starts talking about Bitcoin cattle, it's time to get back to the basics.
That's our show for today. This has been your midweek market check from the Cattle Market Guys. Be safe, stay smart, and we'll catch you down the road. That's all for today. Remember to sign up for our free daily briefing at herdadvisor.com, and the easiest way to add $300 per head, timing your sales and choosing the right sale barn, is at herdadvisor.com with the Cattle Market Guide.
Catch you in a couple days.
Okay, see you then.